full ride scholarship, played professionally for a very small period of time. And then that went away. I got hurt while I was in Croatia in my mid-20s. And then I struggled with life, just trying to figure out what to do. I partied. I did a bunch of stupid stuff. I was hooked on opiates, That was tough. That took me all the way to homelessness for a little bit of time, rehab, and had to do a lot of work to get back on my feet. Everything that you think is going to work in small cap ends up working against you. And there are very specific reasons for that. Fundamentally, supply and demand, and the way that these companies get the money that they need to survive, all that good stuff. There's a lot of fundamental things that are stacked against longs. I have found certain strategies that also actually take advantage of that. I'm just looking for, is this primed to run or not? Those are the very basic requirements, that it didn't recently run really big and they don't have a recent big gap down.
So what do you mean? You mentioned a word, prime to run. What are the things you look for that a stock that you can see, okay, there's a potential that this stock is primed to run?
What I've been doing forever is, what was the biggest mover yesterday, right? What is the most explosive stock? What made it? And then I go back and say, well, what happened there? What was the catalyst? What sector was it? What price range did it come from, right? So is it a $3 stock that went to 10? Well, tomorrow I'm not looking at $10 stocks. Tomorrow I'm looking at $3 stocks. And it sounds kind of simple. It's very, very simple. You got to be creative, you got to, and you got to think outside the box. It's not just the patterns, the patterns are very irrelevant at the end of the day. People ask me, what's your favorite pattern all the time? It's like, whatever's worked yesterday, if I know how to play it, and if I don't, can I learn how to play that?
Day trading stocks seems really complicated because we've been hearing a lot of different technical strategies online, especially when they involve the small cap stocks. But today, we have a very special guest, a trader who actually figured out his path to consistency and made millions doing one simple thing: buying the dips and reversals, especially on small cap stocks. Meet Roland Wolf, a day trader who mastered the most simple trading style: buy low and sell high. Unlike most of our previous guests who are masters in short selling small caps, Roland realized in the early stages of his career that he could actually develop an edge in going long in small cap trading. His secret is to study psychology behind short selling strategies and reversing the trading behaviors to succeed in buying small cap stocks. He believes that there are many successful short sellers in the day trading industry. However, he also understands that the market is fundamentally driven by supply and demand. He ultimately prefers to be long biased to avoid the risks associated with short selling. In this Humble Traders podcast today, you're going to learn how Roland Wolf simplifies his trading process and focus on high risk to reward opportunities, his repeatable reversal long strategies for small cap stocks, how to time dip buying and reversal entries and identify the bullish sectors, Roland's risk management principles to achieve profitability, and how trading has changed his life from being homeless at one point to achieve financial freedom. If you are a beginner trader watching this episode will help you understand how to keep trading simple and find repeatable patterns on the charts. Remember to drop a like down below if you're ready to learn from Roland's success today. Welcome to the podcast, Roland. I have to say, you're probably our first guest who is specifically long biased on small cap stocks. So I think our audience will really think this interview is refreshing from all the short sellers we've been hearing about. But before we start, I just want to know how do you describe your edge in the market today?
So as you said, long small cap is a touchy subject, right? There's a lot of pumping going on, and people pretty much think it's a scam, right? That's kind of like the general consensus for people who don't know about it is that Wolf of Wall Street and it's a scam, right? Kind of penny stocks and that sort of idea.
Pump and dump, single that.
But almost all the best traders I know are in the realm of small cap for day trading and finding their edge. It's usually there, right? They have edge in probabilities and stuff like that. I have found the opposite to also be true. And I have found that you have to think outside the box too as well. So in other words, everything that you think is going to work in small cap ends up working against you. And there are very specific reasons for that. Fundamentally, supply and demand. And and the way that these companies get the money that they need to survive, all that good stuff. There's a lot of fundamental things that are stacked against longs, right? So I have found certain strategies that also actually take advantage of the fact that they're doing that, right? The fact that they have to regain compliance, the fact that they have to do very sketchy things at the end of the day, right? And so if you kind of know what the scam is, in other words, if there's a way to make money from it, for me as a trader, that's my job, right? If there's an inefficiency or there's some sort of way to also take advantage of that. So it's kind of, it's kind of the wild, wild west, but it's also, they are the most volatile stocks every single day, small cap.
Yeah,
you know, from a percent gainer perspective, you know, almost a decade now, I've been watching a scan that gives me everything that gaps on any volume, right? Very small volume. So I've been watching, and it's always a small cap stock, almost always, right? Unless we have a huge move in the overall markets, because that's how everything works for a reason. So that's kind of, it's kind of a weird journey to get there. And a lot of it is based off of short selling, you know, and Tim Grittani's guide back in the day is something where, you know, I was trading without process. And when you're long without process, it's a really dangerous place to be. It's just confusing, because everything you think is going to work doesn't work. And then you say it's a scam and you start blaming everyone but yourself for where you're buying it, chasing highs pretty much, right?
Yeah.
Which is what we all do when we start there. It's just chase through highs a day. I don't know how a lot of the other stuff works, but I know small cap in the morning, when it goes through highs a day, when you see it over and over and over again, it gets slammed. And I know it's my friends shorting these things as well. I know it. I know what they're doing, you know? I happen to have a lot of friends in the industry, and it's helpful to understand all the different players, right? So I think a lot of new traders get in the game, and someone sold them on some pattern that's going to make them a billionaire. You know?
Breakout.
Yeah, and that's it, and that's really it, and it's going to feed that instinct, and they're going to do it for years. A lot of people, you know, by the time I end up speaking with them and showing them that there are other ways, right? And I think a big part of all that to me is that there's so much great information out there right now, and there's so much information out, more than ever, in terms of free learn how to trade stuff, right? And everyone's kind of saying the same stuff though, in terms of buying breakouts, and don't buy stocks under VWAP, don't catch a falling knife. Like there are kind of a lot of sayings out there that I have found have totally worked against what actually works for me in small cap. But I find that you can find some really, really amazing risk reward opportunities. They're not going to be the highest probability opportunities. And I think that's where people struggle. You know, if you're going to back test what goes on, most of the stocks fade in small cap. There's a lot of dumping that goes on, dilution. You know, for people who don't know what that is, they're dumping shares, brand new shares onto the company. And it's never a good thing, right? Because that's excess supply. A stock won't go up. And then the float gets bigger, the amount of shares get bigger, and it's harder to go up, and the more they pump. So really, at the end of the day, there are a bunch of pump and dumps that we're trading if you're trading sub $10 stocks.
Okay. You kind of just touch upon a lot of topics that we definitely want to discover and talk about in detail. Like, for example, you mentioned the SEC filings, the dilution, and great risk reward with maybe subpar probability. But we all want to touch upon those, especially your strategies. So before we dive into those details, could you just kind of tell our audience, like big picture wise, what's your most memorable trade, and what's the framework for that specific strategy on the long side for small caps? Because people need to know they can make money on the long side as well. No,
for sure. A lot of the trades there's not really, I'd say, one memorable trade, but a series of setups and a series of memorable trades. I don't know. I can get caught up in our space, I think, like a lot of people, especially if you're coaching or you're trading or anything's public, and where I have friends who make so much money that it's like, and then I have to understand, you know, I've got 4 kids and everyone has their own risk tolerance. And so for me, I've been trying to kind of push, you know, I've had $60,000, $80,000 trades, you know, so for example, my biggest trade's AUPH, and it's a bio. So if we're going to get into a trade, one of my favorite trades for sure. Okay. But does it embody what I would do today? No, it doesn't. Okay. Some of the principles, but it was a biotech, and when I was new, I did so much due diligence on biotechs. Like so like people are like, do due diligence. And I'm like, okay, I'm trying to be a better trader like everybody. So I'm trying to figure out a process that's going to work for me in terms of, okay, well, if I do figure out what's going on with these biotechs I'm trading, maybe I'll have some edge there. Maybe I can figure out, and you start reading it and it's very fluffy, obviously, and you don't really know what you're reading.
Yeah.
But in this case, I just fell in love with them. They had a lupus drug. They were like the only lupus drug, and they had phase 2. And I did a lot of research, in other words, right? So it was really a investment trade, so a swing trade on a biotech, which is funny looking back because that's nothing I would really do today, right?
You don't want to fall in love.
No, in fact, they did an offering and they dropped to $4 going into their phase 3 results, right? So I loaded some of the 4s, it got to the 8s, and then they had, so I was up 100% on the position. So that was part of the thesis for me, is like, okay, if I dip by it, it should run into these results. And if it's positive results, then great. I've been positioned amazing. And if it's not, then what's it going to do? Drop 50% or something like that, right? And I'll still be okay with my 4 or something average. And I was on my way to a boot camp to go work with a bunch of students, and it halted up after hours. I was in the airport just trying to sell it from my phone after hours because it was in the 20s, right?
Right.
And so that's my biggest trade, but that doesn't really, that was earlier me. So I've kind of evolved over the years from a lot of things. I used to be way more price action oriented to now, once I understood what I'm really working with in small cap to the long side, it cut out so many of my other strategies that I used to trade. I trade from a place of extreme safety. I'm a dip buyer.
Okay.
When we're starting to kind of get into the nuances of how to trade long in small cap for me, it's pretty much the opposite of what anyone's teaching.
How did you discover trading in the first place, and specifically going longs? It seems like you never really deviated and went to the short selling route.
I did a little bit.
Okay.
I did a little bit. So going back, I got into trading because I had a son, right? And
The first one?
My first kid, the first one in 2014, and that changed a lot of things for me, right? Because now I'm like, I got this kid. Prior to that, I played soccer, and that was my dream, is just to play soccer. Never wanted to be behind a computer. Never wanted to be behind a desk. Full ride scholarship. Played professionally for a very small period of time, and then that went away. I got hurt while I was in Croatia in my mid-20s. And then I struggled with life, just trying to figure out what to do. If you love something, all my eggs were in the basket. And so it's like, what am I going to do now? And I partied. I did a bunch of stupid stuff. I was hooked on opiates, if we're going to dive really into like just before, and I think it is relevant because this is just before trading for me, kind of laid the backbone for a lot of stuff now. And I think me as a trader and risk tolerance and everything, right? But ended up hooked on opiates, from my ankle injury and the subsequent treatments and stuff like that. And that was tough. That took me all the way to homelessness for a little bit of time, rehab, and had to do a lot of work to get back on my feet. But a few years after that, I had my son, which we just talked about, and that focused me. I was like, okay, we got to go back to school. And then 2 years after that, I had my daughter. My first daughter was on her way, and that was the catalyst to trading for me. Okay,
I see.
The catalyst was, hey, let's try to make a little bit of side money on top of your 9 to 5, because we were paycheck to paycheck, and so that was the motivation, right?
Okay.
It wasn't a Lambo for sure.
No, you just want to put food on the table for your kids.
Exactly.
Yeah.
Exactly. And I joke about the Lambo thing because
it's funny.
It's hilarious, but I joke because I've got 4 kids now, so there's 6 of us, and I have to be able to put 6 people in a car. And there are no 6-seater Lambos, so.
They have what's it called? The Urus?
6 people don't fit in that. I have to put my kids on top of it too, and No, it's good. But that was the motivation, and I didn't even know there was a whole nother realm, I don't think anyone really does, right? When you get into trading, you're just trying to make some money. Like, dude, everyone I talk to is just, generally speaking, trying to improve their life, right?
So you didn't go into trading thinking that it was going to be a full-time career?
Oh, no. No, I thought it was a side. It was going to be a side hustle for sure. Just to supplement something that I liked, and that made sense to me, right?
Yeah.
Really, what happened was I took a few $100 and I put it into a gold stock called Barrick Gold at the time. This was 2015 or 2014, after my son was born, and it doubled over 8 months. Right. So I'm like, wow. Like, that's the stock market, I guess. I can make money from my money. Yeah. And I didn't touch it. That was the first real realization where I'm like, cool. And then once my daughter was on the way, I'm like, how do I do this faster? How can I make 80% on my money faster? You know, and that took me onto Google. That took me to YouTube, obviously. And then I ended up joining Tim Sykes, you know, that's my, stocks. I mean, and, you know, I saw a video of him, and really it was Tim Gertani. I saw a video of Tim Gertani and it just resonated with me so much. The authenticity of what I saw, you know, because let's face it, we all watch this stuff, you know, and with a certain bit of skepticism, you know, when you get into this thing and everyone's claiming so many things. So why wouldn't you be skeptical? And so many people get sued for so many dumb things. So why wouldn't you be skeptical? But I remember just seeing a video of Kurtani talking about his trading, and it resonated so much. I'm like, that guy's real, and I believe him, and I want to learn from them. You know what I mean? So that's what I did. I like to joke because most of the people I work with are either they have a hard time pulling the trigger, right?
Okay.
They're afraid, or the opposite, they're gunslinging, you know, and we have to kind of reel them in like just crazy gamblers. For me, I didn't even know what a chart was. Like, I got eTrade.com. I put the little bit of money I had in there. Someone mentioned a ticker in chat, and I bought it, like, on eTrade.com. I bought some of it, and then I sat there clicking refresh because I didn't know what to do, and the price was moving, and I was up 30%. That's my first trade after, and that was after 10 minutes, right?
Okay.
So I made 30% in 10 minutes, and then I did the math in my head. I'm like, wow, right? Like, it was 80% on Barrick Gold for a year sitting around approximately, and this is like 10 minutes. I made so much money, right? Not so much money, but so much percent to me, right? And then I went on a big losing streak, like chasing alerts, basically.
I think everyone has to kind of go through that.
I'm really guilty of that, you know? So I was chasing alerts. Really, at the end of the day, I joined with the thought, I think a lot of people have when they join any service where there are alerts, which is I can just kind of pad my account while I learn. Because I really did love trading, you know, but I didn't understand what it was going to take at all. No one tells you off the bat ever. You know, I mean, they do, but you're like, they're like, it's hard work. It's going to take years. And you're like, yeah.
But you don't believe it.
You don't.
Yeah.
And I'm like, what do you mean? I can just copy all these trades right here. I'm good to go. I'll learn. Maybe it'll take years, but meanwhile, I'm banking too. So that's kind of the mentality, right? That I think a lot of people start with. And then you realize how so not true it is, and how not replicable strategies are when they're alerted and you're trying to chase and everyone's chasing things around. So really, at the end of the day, that's what I was doing. I was not being a professional. I was on the West Coast in Arizona. So I would wake up 10 minutes before the market opened at 6:20 a.m. Yeah, it's the same time here. Same time here. Right? So it'd be 6:20 a.m. and 10 minutes I'd have one eye open, you know, just kind of like, and chasing stuff. And then I saw a video with a guy named Greg, LX21. And I think you know LX21. He's a phenomenal trader, obviously. And he talked about being a professional, right? Be a professional. And that resonated a lot. I'm like, that's like soccer, right? I can kind of get back to that mind frame. What does be a professional mean? It means I got to be up earlier, be there longer, discipline, read stuff.
Do the DDs.
Do stuff, right? Like, do more than the person to the left and right of me. And maybe not tomorrow, and maybe not the next day or the next day. But over the span of the next month and 2 months and 6 months, I will get exponentially better than them, at least through the initial learning curve and stuff, right? Generally speaking. It's not always that way, especially with trading, right? It's not always linear. But the initial stuff in terms of like learning the terminology and basic candlestick stuff that's pretty common knowledge, right? And I think for that's where people, if you can speed through that, because you can't really force the other parts of it, the experience and stuff. But So that was really kind of the turning point. I started waking up earlier. I watched trading tickers. I invested in my education, for the first time. I realized I have to figure out what other people are doing that actually works, because I don't know what the hell I'm doing. And that was a big, big turning point. And the biggest realization was I need to be a short seller.
You need to be a short seller?
Yes, right. I think
Right,
every
trading
long
tickers,
has this epiphany.
yeah.
Every long and small cap and trading probably in general, like, man, if I was just like short selling, once they learn what that is, and all the best traders I know are short sellers and stuff like that.
Yeah.
And that's what it was for me. I wanted to be basically like Tim Grittani and short stuff. And Dux was a contemporary at the time, Stephen Dux. And he was on your podcast, really great episode, and amazing trader, and someone I've looked up to, as a trader, kind of contemporary and stuff like that. And
so you tried short selling.
Yep.
And what made you decide to realign your focus to strictly just going long instead?
Big loss.
Oh, big loss. Okay.
Yeah. Big $40,000 loss.
You got squeezed.
On a Chinese stock.
I see.
And I'm moving homes, and I got kids running around. I wasn't even supposed to be trading that day, right? And I took a small size on the stock, short, and I had been, that month I was up $60,000 or $70,000 on the month shorting. It was very accurate, right?
Yeah.
And then it just kind of got away from me, right? It was went 10 to 5, and then I was use 10, and then it halted up to 15, and gapped up to 20, and I added some, and
the add
went on a little ride,
okay.
and I had
having there too.
And you know what? It was so painful to me as it was happening, the loss of control, and ultimately at the end of the day, I cut it. And I'm watching my kids run around, and I'm just sitting there what the hell is going on with my life, right? I'm I don't want to do that for now. And I really haven't gone back to it since then.
Okay.
Just to be honest, that's it's a risk thing for me.
Yeah.
And I'm not ashamed to say stuff like that these days. It's just kind of is what it is. It scares me.
Yeah, I think short selling is, high probability win rate, but also really, really high risk.
Yes.
It only takes one to blow you up.
Yeah, exactly. Yeah. And I don't like living like that personally. Yeah. I know. So I have plans to short sell again, because I think it's it's an amazing tool with such great probabilities on certain trades and stuff like that. And but it'll just be an account I can lose and be okay with, or something like that. There are always ways to mitigate risk, in other words, and take advantage of something.
Okay.
Unless there isn't. The success actually came from understanding short selling. So not even short selling, right? That's something that, for me, short selling is something that's best for more capital, really, at the end of the day. It's a little bit in terms of taking advantage of them. They're usually, hopefully they're extended, and, the stock price is getting higher. You got to pay borrows. They're a lot of the brokers, at least in where I'm at, you need to have $30K in your account. There are a lot of, some hoops to jump through and stuff like that. But what I saw is that I was able to match my long entries to Tim Grittani's short entries. Yeah, so where I was buying, he was shorting, and I was losing, and he was winning.
Okay.
Right? A lot. Just going back and looking through his trades, looking through my trades, and putting them together. And I was driving with my wife one day, and I had an epiphany that was happening. And I look at my wife, and I go, I have been buying Tim Grittani shorts. And she's like, what? She has no clue. She's like, okay. I'm like, it's never happening again. I'm not going to do that again, right?
Okay.
In other words, how do I sell here too? But I can't short, but not shorting. That means I have to buy it lower. So that sent me onto this quest to see how low I can buy these stocks. And then I didn't realize at that time also what I was doing was avoiding all the worst dangers in small cap, not just from when they get extended and they go too far, and they're going to have really bad things happen to them, but also the dilution we're talking about, which always is happening at higher prices. So within that realm, I didn't realize I was just going to be trying to buy these stocks low and sell them high. As stupid as it sounds like that, that's what it is. Buying breakouts, to me, generally speaking, you're buying high, right? Generally, and you're chasing, it's a very psychologically contentious spot on charts, right? Psychologically for everyone. And
probably with the lowest win rate too, if you buy breakouts.
It's literally my number one least favorite long strategy are intraday breaks. There are very few exceptions to me, right? Okay. For small caps specifically. I know a lot of people are like, oh, what do you mean like no breakouts? But to me, it's specifically in small cap, there are reasons, right? They're dumping shares there. If I had 5 million shares to dump on a stock, and I've got it at $1 because they give it to me at $1, and it's now at $5, and high a day's there, and it spikes through high day in the morning, 550, like you're dumping there because that's where the liquidity is. If you got to dump shares, you have to have liquidity. So there are a lot of things that happen, and then you see it get stuffed, and then you're like, it's a scam. You know what I mean? It is. They're dumping shares, and it's only not a scam because they told you they're going to dump them and where. This is common public information.
Yeah, in all the filings. So you essentially discovered dip buying. Around what year is this into your career, and how did you start kind of pulling all these different research and building a process for this particular strategy?
Trial and error, and then debunking things that I was either taught or that were found to be common knowledge, one thing at a time. It kind of felt like, really, at the end of the day, for myself, right? If I just literally listened to every saying out there, there's no way I could have been successful buying stocks, or could be. I don't think, personally. Right. Everyone's saying the same things and doing the same things, and then it doesn't really work. And specifically with small cap, like I said, with all the danger that lies above. But at the end of the day, I found certain scenarios through tracking trades. At the end of the day, what I realized is that it is a very much the long game, I think, everywhere, but specifically in small cap, is a moving target. It's such a moving target. The patterns, they come and go. The strategies, they come and go. Catalysts, one catalyst today, biotech with phase 2 news could send a stock going crazy today, and tomorrow do nothing. Same catalyst, same stock. And you're like, how does this even equate to, rhyme and reason and stuff like that? And so for me, it really comes down to kind of the life cycle of these small cap stocks, right? Which is, they need money. They can't get money. So they have to basically get like payday loans, right? It's like the payday loan of financing in the business world. These are companies, right? They're stocks that we're investors. When we buy, we're investors. And that's what's kind of crazy to me, is that basically during that time, they're going to give shares to an institutional investor at half price and screw all the other investors, So to me, once you realize that's the game, that's what got me away from the DD thing, like that I'm talking about. So in other words, the biotechs with phase news. I know that there are people who specialize in that and stuff like that. But for small caps purposes, I assume everything's a pump.
Okay.
And I look at all the longs from the lens of a short seller. Like, if I'm short, where am I shorting it? Where would I cover?
I see.
And the way we've seen the price action on the big volume stocks, they grind them up to highs and they bring them back to lows and back to highs and stuff like that. Trapping shorts, trapping longs, and driving crazy amounts of volume. So I don't know. There's kind of a lot of conspiracy theories I have, but they're not. When you go to the websites of the people running these offerings in small cap, it's billions and billions of dollars going through small cap.
So what is your process like for this? Do you just read up on the SEC filings, or do you look for like specific things in the filings?
Yeah, really specific. Just where they're dumping, who, where, how many shares they have. And it's just, and I use Dilution Tracker these days. There are tons of sites where you can just kind of keep track, but anything I can do to make it quicker, The reason people don't get into the fundamentals is because it's boring and confusing.
And a lot of words.
Really confusing, a lot of words. But there are sites, like the one I use, and they put it into small charts and make it kind of easy for you and stuff like that. And it's really quite boring. And, but at the end of the day, you have to know what's going on. Like, you have to know what you're trading and the instrument you're trading. And the more I learned, the more I realized, when we get back to that question that you have for, edge, it has to lie within that macro. And when I'm judging my edge, I look back at my trades and I say, well, how low am I buying these things, right? When I look at these charts, it's actually a strategy my 6-year-old, basically devised for me one day. Well, he's 9 now, but he was 6. He walked into my office, or he was 5. And I'm like, hey, so Dad, if he buys it low and sells it high, like, that's how I make money, because he wanted to know what I'm doing. And I'm like, where'd you buy it? Where do you point? 5 years old, he pointed right to the bottom of the chart, like, oh,
Okay.
right there. I'm like, yeah, totally. And, but that's silly, son. You don't buy under VWAP, and and I don't do this and I don't do that. And
So it was your son who kind of inspired you to kind of.
I joke about it, but at the time that he said that, because I didn't take it seriously at all.
Okay.
Yeah, I kind of shrugged him off like, oh, that's funny, but he's right. At the end of the day, that's the game I didn't realize I was playing, was to figure out how to buy it down there.
Okay.
Or at least as close to that as I can.
But we just talked about all the potential dilution, right? That I know you mentioned that happening up there. So is it the reasoning for you to start structuring your strategy to buying low is because there's less chances of dilution down there?
So for me, it's more so my short seller friends again. I'm looking for because there are so many of them that pile into these, do pile in, and a lot of them get very aggressive, and I know that they're hitting the lower highs and lower highs and lower highs, and at some point it's going to hit a bottom. Not all the time. At some point there's going to be, and I look at them from the lens of they're going to be all day faders anyways in my head, but I also look at them from the lens of they're also oftentimes able to go to VWAP, back to high a day, and pre-market highs.
Yeah, the reclaim short squeeze.
Exactly, and there's a actual, for me, it ends up being a much better risk reward opportunity. So the issue is when I'm buying strength or I'm buying breakouts and I'm chasing risk reward, what is that? And how do I attain good risk reward and then actually execute that, right? Because people are like, oh, I have 1 to 3, but then you look back at your trades, it's like, no, but your actual risk reward, you're cutting at 5 and at 1 to 1 or worse, right? So you're not getting 1 to 3 or 1 to 5 in your trade, in other words. So that's kind of it's kind of funny, if you go back to years ago, I didn't believe in price targets and stuff like that, and I was really, really price action oriented, and now I've settled so much into the fact that I need price targets. I need to know where I'm going to be selling each trade systematically, and really the goal is to understand that if you're trying to go long in small cap, 80% of the time they're going to be all day faders. If you have that mind frame, and then I like to look at it when I'm looking for entries from the lens of I'm short, I want it to go down as far as it can. And then when's that moment where that seed of doubt would be planted? And usually it'll be at some other level of support, something very basic, nothing too crazy. And then I watch price action. So I'm not just watching price action. I just wait for it to get to levels that generally pre-market levels. If it's a multi-day runner, we can go back to previous days levels and stuff like that and keep it really simple. And then I watch those levels, right? And then I look to get 1 to 5, 1 to 6 to VWAP, right? And that'll be like price target 1. And then price target 2 will be high of day, and price target 3 will be pre-market highs. That's kind of how I will frame the day trading on these gappers. That way, it doesn't matter where it closes at the end of the day. I can still make money when they do bounce, and I can get good risk-reward opportunities. And now granted, they're not going to be as fast and what everyone wants, which is like crazy action, but I don't want that, anymore at least. It's, to me, I'd rather put myself out of the way where my friends are covering. My short friends are like covering finally. They've made money, right? And then I know it's going to be re-shorted on the backside. Then it's like, are we going to squeeze or not? I don't know. People ask me how patient, like, you're so patient. I'm like, not that patient. I just sell into price targets. You know what I mean? And that, I call it buying patience. Then I do that, and through sizing out, that's been a huge tool. But when all is said and done, I'm looking to get really good risk reward opportunities in places where people don't even realize there are trades. But really the flow, the order flow has shifted from a big picture perspective. That's what I'm looking for. So I'm not so much a scalper. I guess some people would consider it scalping, but in my realm, when I'm sitting around in 30, 45 minutes in a position, waiting for the bounce through VWAP and selling some and then waiting it through high a day, it's more positional to me.
So you're buying consolidation below VWAP.
Yeah.
Usually around, you mentioned pre-market levels, like pre-market lows or like support.
Yep.
Oh, I see. And your stop will be below that.
Yep. Yeah, I'm looking for, again, those predisposed levels, whole dollar levels and stuff like that too. But that would be kind of bread and butter day trading to the long side, right? I'm looking for those reversals where bigger picture, I can find good risk reward opportunities, liquidity, and the stock, at least for the time being, has made its bigger picture turn. So I'm not looking for just little bounces and That being said, there are markets where it's just little bounces, right? And that's a big portion of the year. I know that my friends are making money big portion of the year pretty
On the
easily
all-day
on the short
faders.
side, on the all-day faders,
Yeah.
right? And they're
Okay.
hitting the lower highs and it works, right? And I know that 20% of the year is where I push it to the long side. And really at the end of the day, I think for anyone, and when it comes down to the trading aspect of the thing that kind of separates a lot of the best traders that I know comes down to sizing. It comes down to a lot of the intangible things that are not the patterns in your strategies, right? You know, it's the experience and then the discretion involved when the patterns arise to be able to size up and essentially be a really good gambler, you know? It's kind of funny if you look at like Traders for a Cause or anytime a bunch of traders get together and play poker, you end up with a bunch of pretty good traders at the end of those poker tournaments. You know, everyone else kind of gets like more or less. And so there's something to be said there about understanding risk and when to press risk and when to not. And that to me is the biggest thing. You know, there are things I do on a daily basis within that context of gappers, right? But that's not all year. There are times I'm pressing it really hard. There are times I'm not doing it at all.
So you're sizing more those times where it's more, I guess, the market's hotter for small caps.
Exactly.
Yeah.
For me, the only time I really get max conviction where I can push as much size as I can tolerate is when we get good macro events, you know, that are driving a sector, for example, sector momentum. You know, that's been one of my bread and butter ideas. War, unfortunately, when it happens, things happen with stocks, right? And things happen in the markets and oil moves and things happen. And
AI.
And our job is to take advantage of opportunity. So, you know, at the end of the day, when I know that there's a big driving factor, like war and cost of oil is going up, you know, some of my best trades come from those scenarios and swinging oil stocks and energy stocks that are normally just really terrible. You know, they're not investments.
But when they run, they can
they can be amazing, right?
Yeah. Could you walk us through kind of what your pre-market routine is like to plan for these long trades every day? Whether there's hot market or slow market, what's your process like?
Yeah, process is, and that's kind of what I preach is like the patterns come and go so much.
Yeah.
So it really is the process of being able to track the patterns, develop a playbook of scenarios and strategies that you know. And then ultimately, like I was saying, as you know, as a long, you can't really fight the tide. But what's funny is it's the same with my short friends. You know what I mean? They're not killing it every single day, most of them. Most of them are still making, you know, a large portion of their profits from a small portion of their trades at the end of the day where they're pressing really, really hard. So really it becomes the art, right? If we're all looking at the same charts and we understand the same strategies and stuff like that. For me, pre-market process, I've been watching the beginnings of stocks for a very, very long time, right? So people usually get some news or someone tells them about it and they see it and it's something that's running and then you're impulsively obviously drawn to that. I scan for $50,000 volume in the morning and that's it.
$50,000 volume.
Dollar volume. So it's
that's low.
It's very low.
Okay.
And that's just to see everything that starts popping up. News I want to see early, and it just gives me a little bit of time to get through the rest of my process, which is all designed around looking for danger, right? Looking to see if this small cap stock is in the right part of its life cycle, which I call it its life cycle, which is, are they going to be is this going to be pumping or just straight dumping? Because that's what they're doing. They're either pumping or dumping or a combination, right? Generally speaking, every time there's a PR, it's being pumped. That's how I envision it. But to find that out, you just go to the daily chart, right? You go to the daily chart, you look at the float, you look if they've split recently, you do all those sorts of things. And then from that point, gap downs, right? So I'm looking at the catalyst first off. Is there a catalyst? Is there not a catalyst? And it's funny because all of this stuff, every part of process for me is fluid. So there are times where I'm not looking at filings as much because it's keeping, if I find, for example, that I keep looking at filings and I'm missing trades because of it, I may back off the filings a little bit. Like maybe even the really dilutive stocks, they're actually running right now, you know, stuff like that.
That's also how you know the market's hot.
Yeah, exactly.
Yeah.
I mean, it's just such a changing thing, but in terms of pre-market, it's always the same.
Okay.
What are the top percent gainers? And then I want to see volume, the catalyst, percent gain. And then from there, daily chart, right? So big picture first, right? What's the biggest? And that's how I kind of view everything. What's the biggest picture? And then we whittle away at that. So daily chart, have there been recent gap downs, right? Have there been bad news or offerings, right? And small cap, if there's a recent gap down, it's an offering. And so that's a red flag because I know they're probably going to dump if they're putting out a PR now, right? Post offering.
So then you avoid those kind of stocks.
Exactly. Exactly. At levels.
Okay.
But you know, you have to and we'll kind of get to that. So gap down, it'll just plant the red flag that I need to go look at their fundamentals and see what happened during that red day. If it's spiked recently on big volume, that's a red flag because, well, it already just recently spiked on big volume. They're probably going to be dumping by now. So I look at it like that, right? And bag holders, right? All the bags and all that good stuff.
Okay.
So I look at it like that. I'm just looking for, is this primed to run or not? Those are the very basic requirements, that it didn't recently run really big and they don't have a recent big gap down.
So didn't run really big, no recent big gap
Yes.
down. So what do you mean? You mentioned a word, primed to run. Like what are the things you look for that a stock that you can see, okay, there's a potential that this stock is primed to run?
Well, lower float, obviously.
Okay.
You know, so if they're a small share count, yeah, they're going to be running it usually. But what's funny is we'll see like low floats also trade in small ranges and consolidate and stuff. So there's a lot of weird stuff that goes on as well.
Hey traders, please allow me just 30 seconds of your time to tell you about the newest and the fastest scanner, stocks.io. I created Stocks because I know as traders, we need a scanner that's easy to use, fast, and most importantly, affordable. That's why I created Stocks.io, a web-based scanner that you can easily take anywhere on the go, and it's compatible with all devices. Stocks.io is truly a scanner made by traders for traders. Now back to the video.
But low floats, catalysts, really at the end of the day, what I'm doing is what ran yesterday, what worked yesterday. And this is the game that I've been playing for so long that's kind of hard to teach people, but you end up with the playbook this way. What I've been doing forever is what was the biggest mover yesterday, right? What is the most explosive stock? What made it? And then I go back and say, well, what happened there? What was the catalyst? What sector was it? What price range did it come from, right? So is it a $3 stock that went to 10? Well, tomorrow I'm not looking at $10 stocks. Tomorrow I'm looking at $3 stocks. And it sounds kind of simple. It's very, very simple. A lot of the stuff I do to be able to find what may or may not run is I'm trying to figure out where volume is going to go next, right? Because that's kind of how things work with us. When we have a big runner, that breeds another runner, you know, because people get FOMO. Shorts finally get squeezed somewhere real big and everyone knows it, and people start piling into the longs, and all the best short sellers I know take losses in bunches, kind of, you know. It's like they take a big outlier loss after winning for a long time, and then maybe a loss and a loss, right?
Yeah.
So to me, it kind of, and I've confirmed that with a lot of short sellers, and I'm like, that's so interesting because I'm basically sitting around hitting singles and kind of like the idea I told you about where I'm selling in a VWAP, selling in a high a day, just kind of very basic trading ideas for me. You know, I don't adjust that until we see a runner. So there are things that adjust in that sense. But really the question I'm asking from a process perspective is what ran, what sector did it come from, what price range did it come from? And then I'll look at the chart and see what that looked like. You know, was it dilutive? Was it not? You know, what were the prices? Did they get to the dilution? How did it react at all the levels? I just start playing like Blue's Clues, basically, like really basically breaking down anything I can find to find a pattern.
Okay.
Right. And that's what I think is kind of interesting about trading. And really people talk about patterns, but it's the successful traders I know, it's patterns in their behavior and patterns of thought and patterns of action and what happens after they lose this many times, or they have certain, you start to understand how you react to certain scenarios, and then you realize it's not really so much the patterns because they're just coming in and out of play, right? And that, to me, the hard part about the long side is that it's a blank chart and you have to be creative, right? At the end of the day, there's creativity. When I'm shorting, you're waiting for your level. Hopefully you're being patient and it gets to levels and you short it and it comes down, right? Hopefully. Or it goes up. But in other words, the stocks hopefully come to you, the plays come to you, they get extended, you're haunting, you're watching them, you have good risk reward. Hopefully you have all these ideas and you have time to short it, in other words. And with the longs, it's not so much that. You have a 10, 15 candles pre-market, and I'm trying to, assess on what this thing's going to do. And all everyone's doing is waiting for it to get through high day to buy it, right? So it's kind of an interesting dynamic. But
what are you waiting for in terms of entry wise? How do you plan for it intraday?
Okay. Yeah, so basically pre-market levels, right? So when I get to the gappers, I will go to the 1 minute, the 5 minute, the 15 minute, and really find pre-market highs, okay? Pre-market highs are pretty much everything to me there in terms of a target. I'm looking at it as a target, okay? Areas where I know would have excited me when I started, right? So areas, high a day breaks, pushing into highs, anything where it's breaking to new highs, right? I notate that level as an area that I probably need to be selling into, right? So that's immediately the lens that I start taking. And so in other words, as the chart's developing pre-market, it gives me time for it to hopefully die. Like I want it to pull, I want short sellers to make money. And bring it down to some better levels for me to trade it at. And what are those levels? Well, it'll be the next levels of support and resistance on the chart. Very, very basic, right?
Okay.
So I'll do pre-market highs. I'll have VWAP in mind, and then I'll watch whatever the main levels of support and resistance are pre-market. And that's why hopefully there's some good pre-market or after hours action or a multi-day move. It can give me more conviction, right? Okay. If it's just kind of spiking right into the open, it can be tough. Just an extended stock gets extended, right? It can be extended really, really fast pre-market. So for me, that's all I do. I keep it so simple. Every part of my process, I try to keep it like that because trading's so difficult in and of itself. And I'm just trying to hold on for dear life to the patterns that are there, when they're there. And that's really what it comes down to. When I have conviction and I'm trading best, it's because I know I have my finger on the pulse when those reversals are happening and what catalyst is working. Maybe it's a sector that's going off, and like AI, for example, when AI stocks were going crazy, anything that put out an AI PR or during 2020, anyone that put out vaccine, news went skyrocketing and stuff like that. So there's a lot to that, but the trading is really basic. I don't like to look at the stock until it gets to those levels. Everything.
So you let them come
I
entries.
let them everything, and that's it. And then I sit there and wait, and the lower the better, right? So hopefully it's going to shake out one leg, and it's going to shake out another leg, and it's be reshorted, and it's going to bounce at VWAP, and then it's going to go through VWAP, right? All those things, and shorts are going to be happy, and new shorts are going to step in, shorting weakness, and at a certain point, it stops selling off, right? At a certain point, because stocks don't go straight down, generally speaking.
Yeah.
That's the point I'm looking for on a daily basis. That's how I trade gappers, in terms of day one moves, which is bread and butter day trading to the long side. Yeah. Basically, I'm trying to buy low a day. Okay. Which isn't the highest win rate for me. I lose a lot doing it, straight up. Like it's not. There are some months that are better than other months, just like any strategy. But the best part of it is it's just a very low risk. It's a low maintenance type of strategy for me that I know for the most part I'm selling in a VWAP and high a day. Areas where people don't even realize there's a trade really. Because you pretty much all the poor longs have capitulated and the good shorts are being paid, right? Yeah. So those are the areas I look for. And people talk about trading psychology a lot, right? Always talking about trading psychology. And for me, it's like, I get it. But if you're trading breakouts, it's really tough to overcome the psychology of trading a breakout that everyone else has, that shorts are here and longs are here and everyone's freaking out both ways, right? You have if it starts to go up, the shorts start to cover again, and then all the longs and the noobs, they get excited, and the breakout buyers get excited, and then when it goes below the breakout level, everyone's freaking out again. So it's like, it's how are you, how is reading a book on psychology? You're not going to overcome that necessarily. I'm not saying there aren't good breakout buyers. I know really good breakout buyers. Just for me, it's not my thing. You know what I mean? Yeah. And I think that's a big deal. Every good trader that I know found something that is their thing. you know, and they trade something that fits their personality, and more importantly, they find their strategies themselves, right? It's not so much, you know, and they take from here and they take from there. That's what I did as well. Like I took from Bertani's short game and realized, okay, but I can reverse engineer this. If I can sell up there, you know, I can, where do I buy it? And that's what just literally sent me lower and lower and lower. Then the dilution and stuff like that. And when volume started coming in 2020, we saw volume we've never seen before, right?
Yeah.
I mean, you remember back before that, it was the much less volume, way less traders. And the patterns have certainly shifted, right? Away from being very, in small cap, it used to just be a heyday for the shorts because it would be like first red day, they're dead. And like, you know, everyone piled in first red day and it died. And now we've seen like crazy Chinese stocks pumping to crazy heights, like, you know, blowing up big entities. And so it's interesting, but I like to keep it simple on the entries. We're getting away again from entries, but for me, on a daily basis, that's what I'm doing.
Okay.
I'm using pre-market levels of support. Generally speaking, I'm trying to find great risk reward off those ideas, because if I'm short, I'm covering into those areas.
So essentially you're trying to buy in areas where a lot of like the chasers, the newbie longs, they are not buying, but you're buying where
they may even be selling it to me. You know? Like there may be capitulating there. So that to me is the idea. It's a very it's doing the opposite of what I used to do.
Do you ever use the tape? Do you read the tape?
Mm-hmm.
Oh, okay.
But again, I don't sit there watching tape.
Okay.
To
Only
me,
areas you're looking
that's
at.
it. And then even within that, I'm watching the tape. I'm watching the time and sales for sure. But there's not anything specific, you know, where it's like magic to me. It's just another part of conviction, or maybe not, you know. Specifically because I trade NASDAQs, and I trade really liquid NASDAQs most of the time. And so these areas we're talking, they're doing millions of shares, you know, a minute at that time in the morning and stuff like that, or throughout the day. And when you're watching when a stock does millions of orders with 1 minute, you know, and the tape gets hectic. It's like, you know, so really I'm getting, I could call it a discretionary feel on the, you know, and watching the tape. Like, is there a lot of selling going through and it's holding? That's kind of what I'm looking for, right? But then I'll also keep that pretty basic, right?
Okay.
Really, at the end of the day, my goal is on that setup is to have the right perspective from a big picture, right? Because sometimes things aren't squeezing, like we talked about. Big portion of the year, I just have to know that it's a single, and I got to sell into VWAP or sell in a high a day, and keep that perspective of just singles. They bounce. They don't have to go through high a day for me to make money, and have actual great risk reward scenarios, you know, on a daily basis. And then the best part about those ideas is when the markets do get really fruitful, I'm getting 1 to 5 to VWAP, right? Or 1 to 10 to VWAP, and then sometimes more to high a day and sometimes more to pre-market highs. Those are the times where I start pressing the pattern, and then I have more size. And then, so really but the biggest part of trading the gappers for me is the sizing out. How do I size out of these things? The buying of patience, right? And when do I get aggressive? And I start playing basic math. And so I have 1,000 shares, you know, I'll cut it into fourths. If we're in a terrible market, I got to sell it all in VWAP. Who cares, right?
Oh, I see.
But the better the market gets, I just try to prolong how far I'm taking these. So a quarter I'm going to sell in a VWAP, and a quarter I'm going to sell in a high day. And I'm going to try to save a quarter through pre-market highs, you know, because I have that kind of perspective that we're in good markets and shorts are being squeezed. We're in those outlier moments.
Oh, okay.
If that makes sense, to long and take advantage of those losses in bunches for my friends, essentially, you know. So very much what I'm trying to do is stay out of the way, you know, at the end of the day.
Just let the trade work.
Yeah, just stay out of the way and stay within the natural flow of things. They're going to bounce. They're going to pool. And if they're volatile enough, there's plenty of meat on that bone when they bounce for me, you know. And I have found that, you know, even just putting that out there for people to understand how I do that can shift their mentality completely, immediately, to like, wow, I don't just have to chase through high a day. And there are other ways to go about it, you know, and there are other ways to go about it. And
Do you have a similar process for swing trading?
Yeah. Swing trading swing trading small cap is dangerous, right? People like to talk about that, but they've also been my most fruitful trades, right? But they all come from that same vein of like, I have to take advantage of the macro. In other words, if they're going to pump it, how can I take advantage of the pump? That's it. That's all we got to do. But the big part for that, swing trading is macro driven for me. It has to be, and fundamentals too. I got to know whether they're going to be that. So the main thing is an offering, right?
Yeah.
That's like the main bad stuff that can happen with small cap is you're in a stock long. Everyone talks about it. Everyone's afraid that they're long. This is why people don't like overnighting small cap too, to the long side. And they do an offering and it gaps down 50%, right?
Been there, done that.
Same. It's how, and you know what? If you're long, it's unavoidable. It still happens to me from time to time, unfortunately. But if you're putting yourself in the right positions, for the most part, it's kind of few and far between. Okay. You can start to avoid it. In other words, by going through the filings and stuff like that. But then also by making sure that if I am swinging, there is war going on and there is some sort of macro, right? Okay. Bitcoin back in the day when it went to like 70,000, when it went to 20,000 the first time, I had Bitcoin stocks, penny Bitcoin stocks that 10x and 20x and 30x and grew my small account tremendously. So the power of sector momentum for swing trades, reverse splits is my number one. That is where, I think every single small cap runner going back that through history maybe was a split recently. And then they pumped, just what we spoke about. When stocks get under $1 for people who don't know, I know, and most, if you've been trading any amount of time, you'll know this, but they do a split because if it's a NASDAQ, they have to stay over $1, right? They have to maintain compliance. So people see, especially right now, what's interesting, there's over 500, 600 stocks, NASDAQs, under $1 every day.
Okay.
So there have been 5 to 6 splits, 4, 3, 4, 5 reverse splits every day. So within that context, they have to maintain compliance. So when stocks get under $1, NASDAQ says, hey, you need to get your stock price over $1 or you're gone, right? You're delisted. Okay. And that's death sentence for these companies. That's it. They can't take advantage of their investors anymore. But no, I'm just kidding.
It's kind of true.
But that's really what comes down. They can't get money, from, they're going to OTC land, which is, a death sentence. So really at the end of the day, they have to get their price over $1 for 10 days. And then NASDAQ's like, okay, good job. And they get to do the split where they take 10 shares and turn it into 1 share and they multiply the stock price by 10. And, so at 10 cent stock's now at $1, just like that, boom.
Okay.
And just like that, they are over $1, okay? But they usually get it to $2, $3, $4, $5 post-split. And then they fade post-split, generally speaking, from 5, 6, 7 to 4, 3, 2, 1. They split. Yeah. They fade towards $1. And this is the only scenario I know in the markets where it might be legal to catch a PR. It's like almost feels like insider trading because you know that it is their goal to make sure they have to hold $1, right? So when they start to fade towards $1, you can be pretty sure that they're going to PR it. They're going to do some sort of pump, right?
I see.
And within that context, to me, is the most powerful swing trade in small caps. It is where I used to try to play it more so when they pumped because that was, there's a lot of splits that don't do it, that don't put the pump out too. And that's kind of the issue with the strategy. Yeah. It's not just every single split. And there's so many right now for a day or something like that. But at the end of the day, it's just, there aren't many scenarios in trading for me. When we're talking edge, this is like a big part of edge is being able to find, for me, creative macro scenarios where you can actually figure out the MO of what the company's trying to do. Because if you can figure out what the company's trying to do, you can figure out a lot of things, right? When you know what their MO is, like, are they going to be running it or just dumping it? And are they going to PR it? Yeah. And then the big deal is if you watch, they're still faders. So if you notice, even how I play gappers, it's kind of designed on staying out of the way. This is the same sort of thing where my favorite trades are where I can swing based off of an idea like this and then wake up and not have to trade price action. You know what I mean? Because, and don't get me wrong, I can trade the price action. But there's something to be said for for not even having to do that sometimes.
I see.
And most of my best trades have been like that, where I didn't even look at price action, right? I put myself in an advantageous position based off of experience and a macro event or a macro knowledge, right? And then I get lucky. Really, at the end of I mean, more often than not, I've been in splits where I thought they were going to PR and they did this offering put, instead. I'm like, assholes. Okay. That can happen, so there's nothing guaranteed, obviously, but it is the best scenario for me in terms of swing trading, and then getting PR, like actual pumps,
I see.
I mean, I remember I don't know about you, but when I started trading, I remember thinking, man, you have to sell the news. How do you do, like, you can't, that's not a thing though. That's like for institutions or something, like insider knowledge.
Right.
What does sell the news even mean? So how the hell am I supposed to have it, right? Before the news was kind of always the idea to me. Now I get biotechs and world events or whatever, stuff like that. But for small cap, it's a really powerful thing, especially when you start to realize and you go back to all the big black swans over time, the ones that went from 2 to 20 to 50 and did the crazy stuff. And pretty much every big spike in small cap were recent splits. Almost all of them.
Okay.
Almost all of them.
So
like
your
without
idea is kind of after the stock splits, you find like a support near $1. So that's your risk area.
I always look at it like $1 floor.
Oh, okay.
Just in my head to
That's
keep
how
myself
you're playing
safe.
A risk reward.
And because I'll buy it in the 2s or in the 3s sometimes, but in my head I'm still like, ultimately I have to cut. I'll find so if it's 2s, 3s, I'm looking for basing on the chart, and then because I still have to have risk,
Yeah.
So I'm either sizing down and giving it all the way to 1, but more likely than not, I'm finding a basing action and then using that risk. So it's like, it's in control, right? It's in control, and it's just an idea that comes in and out of play for me too, right? Okay. So, and this is a great example because this is my favorite ever swing swing strategy. It was my favorite day trading strategy, and then it became my favorite swing. I'm like, well, it's a great day trading strategy. Like, why trade the price action if I know within a reasonable doubt, whatever it is, relative certainty that they should pump. Like, it's good for them to pump. You know what I mean? That they're going to do it because they need to keep their price over $1, right? If I can have that, I don't get too many opportunities in the market like that to have that kind of conviction in a setup, Yeah,
that brings me to the next question. How often do you take these swing trades, specifically the reverse split ones?
That's these days weekly, pretty much.
Oh, wow.
Every couple weeks. So, I mean, and this is a great point because 2020, when we had the big influx of trades, and then 2021, markets went back out to all-time highs, remember?
Yeah.
They panicked, and then they went all-time highs.
Yeah.
I don't know if you remember. There were no penny stocks then. Do you remember this? Like 2021?
There were like $1 to $2 stocks.
There were no sub-dollar stocks.
Yeah, that's true. Yeah.
It was crazy. And I'm like, oh no, like there's no stocks under $1, which I trade not just dollar stocks. I'm not just sub-dollar. I trade pretty much up to 10 is kind of my sweet spot. So it is 10 and below, or
but they will only need to split a reverse split if they are going under $1.
Totally. So I was like, well, there goes that strategy. And sure enough, it did go away completely because they didn't know I needed to split for a while.
I see.
Today, markets are higher than they were then, and we have 500 stocks under $1 and 4 splits a day.
4 splits a day?
4 splits a day. So okay. I think it's not a conspiracy. It is what's happening. The offerings and the powers that be in small cap are dumping these days. You'll see stocks go down to 5 cents and 3 cents, in my realm. So it's a really scenarios like that I love, and then in terms of, for people listening and stuff like that, you got to be creative, you got to, and you got to think outside the box. It's not just the patterns, the patterns are very irrelevant at the end of the day. Yeah. I mean, people ask me, what's your favorite pattern all the time? It's like, whatever's worked yesterday, if I know how to play it, and if I don't, can I learn how to play that? Is there something one thing that's guided me in terms of adaptation, because that's what you have to do to be long. And you have to be a trader, right? You have to adapt.
Yeah.
But for me specifically, I'm always trying to figure out what's coming next and when the momentum's going to die, when I need to pump the brakes or when I need to slam on, press the gas pedal. And I have a rule of 2 essentially, where if I see something twice, I don't really question it. It becomes a pattern, right? If I see it twice, I don't question it. And that's how every setup I've kind of made over time has come, right? That's how I actually stop myself from going on really big drawdowns now. It's like if I lose twice on a setup, I just want to see it work once first, okay? And then I'll go back to that setup, So in other words, if I'm swinging a reverse split today and I get stopped out tomorrow and then again tomorrow and I get stopped out the next day, I just want to see one work first.
Okay.
Before I start pressing that strategy hard. It doesn't mean I can't trade it, but it's a way of adaptation. And and I realized really early on the long game is just, it's wild because you have pumpers everywhere. Your instincts are all telling you to chase. You don't even know what chasing is. Risk reward's foreign to you and all these things that end up being really, really important. But also really simple. If I don't, there's nothing I'm doing in terms of data or anything, where it's like very, very, very complicated.
I see.
And I think it's kind of funny because you think that's what you're looking for. I think everyone kind of thinks they're looking for that answer, and it has to be complicated. And then all the best traders I know end up kind of dumbing down the knowledge that they attain. They have to actually end up filtering out a ton of it to actually then trade that knowledge successfully. In other words, they end up finding a system that's actually simple and repeatable, Okay. And that's big to me.
Yeah.
And for me, margin for error. It's something that I didn't care about, but early on or think about, but it's something that for me, it's like, I also want my trades to, when they don't work, to work. Okay. So
what do you mean by that?
Okay. So if I'm selling in a VWAP high a day and pre-market highs, and I think it's going to get to pre-market highs and I sell some in a VWAP and get stopped out, it still worked. I still sold some in a VWAP. If I'm able to get some in a high a day, great. If I'm able to get some in a pre-market highs, great. If I'm wrong, it's a small loss. It's fine. I've taken some off. Whatever happens, I've mitigated risk. At the end of the day, if I'm buying like high a day breaks or something like that, I'm trying to avoid spots where you get big, nasty candles and I'm long, right? Those spots where you're long and it's just, and you lose control of the trade immediately. It can happen short through highs if you're shorting and you're not controlling. But same with what I do. It's a big deal for me to be able to, to control the trades in that sense.
So I understand when you go long sub VWAP on a lot of these small cap stocks are kind of spiked and then they sold off, and then you're longing through those support areas or where the shorts are covering. How do you make sure when you go long, you're not getting like rug pulled, or rug pulled, or ended up in a huge downtrend for a lot of these stocks? Like, what are the 3 tips you give to a lot of newer traders who's trying to learn how to dip buy stocks instead of buying breakouts?
Totally. No, it's for me, a big part comes down to kind of what we've spoken about before, the whole process behind it. Buying low, first of all, right? If you're buying breakouts through highs a day, that would be number 1. Don't do that. Okay. That's the number 1 spot where my short seller friends are, when it goes back below high a day and you're long, they are piling in. I have a lot of friends who like, well, there's the stuff through pre-market highs, and you'll get big candles. Basically, when stocks get extended, that's when you get big candles. Okay, and just dip buying weakness in and of itself, you start to avoid that. Once you've had 1 leg down, 2 legs down, when what I mean by that is the stock's pulled back, it's consolidated, it's pulled down again, right? And we're stair stepping down, and now it's higher low for the first time, or now it's double bottom for the first time. That is where those are the areas, if you start watching there, right? Now, that being said, there's also the big metric for that for me in terms of the big red candles is, can I buy this stock and walk away and come back tomorrow and be okay, right? If you ask yourself that question, once you realize these stocks are going up and down so fast in 1 or 2 days, where are you buying that? Like, will you come back tomorrow and could you be down 30% tomorrow when you look at the chart, right? If that's the case, then you have to proceed with caution, so I'll treat that differently because you may get some big fat red candles up there, slippage.
Yeah.
So when we're talking avoiding red candles, that's the biggest part is where are you entering the stock, right? Don't chase, right? Don't chase a liquid stocks. That would be another one. If you're randomly buying a liquid stocks, well, one seller can give you one of those big red candles, okay?
Yeah.
So there's stuff like that as well. But at the end of the day, it's not chasing, not chasing through highs, making sure if you are, you're controlling it. I talk about, kind of the feel of the trade a lot, which is important to me. When I'm dip buying, I can still dip buy stocks that are up a lot. Like they've gone 1 to 5 and they've pulled back to 4, but I know intraday, there's still a lot of downside there.
Yeah.
Right. So I imagine that like I'm, on a high wire between 2 buildings and I'm walking a tightrope. Right. Okay. And if I fall and I make a mistake, I have to be perfect in this trade. In other words, I have to execute because I might be holding a bag at the end of the day. Right. Failed breakouts are the top at the end of the day is kind of the issue I've always had with that. So that's the main way is where you are entering, where I enter stocks on dip buys after they've shaken out 2, 3, 4 legs down and it doesn't always work perfectly like that, but when they do, it's, there's not too much panic left. In other words, right?
I see.
All the people who chased in the morning are finally capitulating. That's the area. Everyone knows that area too, because I only know it from trading it. You buy it, and then if you're holding a bag for some reason, that moment where you capitulate is always the moment it turns. It's really funny like that, but it's also says a lot about the group psychology, and how the market psychology there. And those are the areas I really am looking for, and everyone thinks it's dead, and then it's hitting their scanner later in the day, and that's when I'm taking profits, and they're getting excited to buy it again. Does that make sense?
I see.
I try to keep it under that lens. It doesn't always work like that, but that's the best trading for me looks like that. And because of that, it's not so much of an emotional thing. It's I try my best to have it be like that these days. Maybe I'm getting old.
You're just trying serious. To mitigate your risk.
Yeah, no, and that's what I think that's what we realize in this game once we get into it is that we're playing that game of mitigating risk.
Yeah.
And everything I'm doing is for that, while also being able to put on the risk at the right time and in a major way. And how can I do that if I don't have any confidence in what I'm doing? So how can I be long with a bunch of size if I'm worried about big, huge red candles? It's pretty tough. So that's why I try to find scenarios where I don't really have to worry about big red candles. And that means I have to be early and not necessarily just early, but low. I got to buy low and sell high. It's so stupid.
Do you still use live stops for your entries?
Yeah, I will.
Oh,
I will.
Okay.
I will if need be. And then again, like I said, the areas that I trade, and I've always been of the mindset, like I want to be stopped anyways. And, if market makers are getting my stops are in the wrong place,
I see.
There are now, granted, if I'm dip buying in the morning and I'm actively doing my day trades and stuff like that, I'll mostly be controlling it. But I don't mind, if I'm live or I'm multitasking or, get breakfast, I'll throw stops on. But I don't trade fully with stops now.
Oh,
it's case by case. There are times where I don't want to put stops out there. Like I said, if I'm controlling them, I'm in control of my trades. So I do understand the concept of that, but I've also been of the mindset like I wanted to be stopped. So so who really cares at the end of the day? If they're doing that to me, I need to adjust my stops or I need to adjust something else. So I don't put too much into that, unless I need to. So in other words, if I'm trading something that's really extended and I have to be really tactful with my executions and stuff like that, then I care more, I guess you could say.
So do you since reversals, there's some that happen early in the morning, there's some that happens late in the afternoon. Do you trade throughout the entire day?
No, I try not to.
Okay.
I try, the first hour of the day, I'm looking for certain things. And then I'm basically teaching, I do. Okay. And then I'm like working with students one-on-one. That takes up everything until power hour, I do that till power hour. So I start looking an hour and a half into the day, unless that I'm noticing like twice in a row, like I was kind of mentioning, a pattern developing of midday squeezes, right? So in other words, what I'm trying to do is be at the markets when it pays me to be at the markets, the most. When it really, I'm trying to be efficient with my time as a trader these days. Cut out the BS, find the biggest portions of the moves that I can find, and then take advantage of those, right? And then learn other stuff along the way and just try to see what else, like I said, if there's stuff that's running and I don't know what it is, then I can learn something new, and that's been a big part of the last few years has been, the trading's been really good. 2022 was really, really, really humbling. We were talking about it. I was on an 8-month drawdown after not having more than a 2-month in a row drawdown for like 5 years straight. So it was, it sucked, and and I have 4 kids, so that was one of those interesting times that molded a lot of what I teach and a lot of my viewpoints now, back in the day it was gung-ho, like, you got to study 100 hours a day and you should definitely quit your job and like all that kind of stuff to do this full time. It's the dream and all that, because I truly felt that way at the time, but I hadn't been humbled at all in terms of what can actually happen. And then what happens when I got to look at my wife every day and come home with no money again, like from my job, it's like and then I have to teach my students. That's tough, right? When you're trying to set a good example and I'm like, yep, lost again today. So I ended up in a big funk that molded so many viewpoints for me for the better, and in terms of reaching out to other traders, seeing what works for them, being super open-minded, and then trying to be really generous with my time, because I found that everyone I reach out to, everyone I teach, I've been learning from.
Yeah.
We were kind of talking about how cool it is, the exchange in our communities. People get excited about it, and traders are everything, right? Engineers and software people, like you don't know who, we encounter in this space. So it's really kind of cool to see all that come together right now. And, but it's an interesting, maybe it's kind of natural. I don't know if this happened for you, but you kind of moments where you're like, I got this, like and my way or the highway, and I would look at other people's strategies. I would look at other people's ideas as like kind of stupid, like that probably doesn't work. You know what I mean? Like you get full of your own stuff. And that taught me so much of the opposite, that, you know what? Yeah, anything I can get again, because I was struggling. Biggest turnaround outside of the markets turning from that funk was hard work again, because I wasn't putting in work. Instead, I was fishing. I was like running away from, trading and my bad trading and so I was like fishing and kind of doing all these things. And then I realized, well, you should stop fishing. You need to work on your trading, buddy. You need to figure out what's going on. You need to reach out to people. And that's what I did. And I actually reached out to my students, and I started doing this thing called trader therapy on Fridays. It was born for myself, right? I'm like, listen, everybody, I have been sucking for so long and I don't know what the hell is going on with me. You know what I mean? It was 100 people I've been trading with in a Discord room since Discord opened, like my closest trading people, some students and colleagues and all that good stuff, right? And I'm like, I'm really sucking. It's been 8 months. I don't know what to do. And there was something very freeing in that for me, just in that. It's kind of crazy, kind of stupid. But that was October 2022, and within that meeting, we came to the conclusion for me to just size all the way back down and just see if I can make any money again, right? Just hit singles, just be okay with that, because when you start making size in this game and then your friends are making millions and you're seeing crazy things go down and you get desensitized to money and like what it means. And I had a hard time making less than $1,000 a trade. If it didn't hit $1,000, $1,200 a trade for 15, it was underwhelming and it didn't seem worth it. Like, you forget, like, that's so much money.
Yeah.
It's so much money. Like, if we had that cash here, it pays, so many people would dream for that. Like, they work all week for that. I did that. I worked all week for that. You've worked all week for that. It's like, and so we'll get desensitized to that.
Yeah.
So that was a good exercise for me of like, okay, let's bring it back down. It's now I go there all the time. What's size down to me now? It's like 100. It's like something ridiculous because it's not the money, it's the performance. It's the free yourself. To me, it'll be 100 shares. What do I do with 100 shares? All right, I got to sell 25 of them. What's my job right now? I got to sell a quarter into VWAP. That's my plan. Well, how am I going to do it with 100,000 shares? How am I going to do this with 10,000 shares if I can't stick to the plan on my 100 shares and sell a quarter here, right? I need to make sure that when I have 10,000 shares, I'm going to sell 2,500 shares.
Yeah.
And so I can be less emotional about it and just let the math work over time. So that's something that I was able to make my math work again, my risk reward work. In other words, I was able to see, look, oh yeah, the losses don't hurt as long as I can keep them nice. And my winners started to work out again and the market started to shift. And then that December I had one of my biggest months ever. It didn't get me all the way green, but it did wipe out a big portion of that 8-month drawdown. So the one saving grace within that drawdown was it was just paper cut after paper cut after paper cut, as opposed to like big loss revenge trading. I went to the same well every day and it didn't work. And instead of changing, I did the same thing every day. Right. So
adapting is like the name of the game for trading.
Adaptation and then perspective. I think perspective for people that we don't know what the markets are going to bring at any given time.
Yeah,
you know?
No one knows.
Yeah. And another portion would definitely be to stay humble, like really actually stay humble. And it doesn't mean that you can't know that you're good at trading or your track record's great or whatever it may be. In fact, I'm armed with way more tools since that happened, way more tools. People used to ask me how to, overcome the fear of pulling the trigger, because this is what happened to me by the end of 2022. I had that. My setups were coming back, but I couldn't press buttons. And that was the case. Size down, press buttons, and that's what I did. And by the end of, like I said, mid-December, I was back up to full size and confidence like that. So
would you teach your kids how to trade, your 4 kids?
Oh, man. Yeah, definitely. If they want to. My sons already want to. They're interested.
Okay.
But they also just both my sons want to play baseball or soccer right now. And my daughters, they don't care that much. I mean, one's only 2, but she'll end up in my stream sometimes because she'll just pop up. She's super cute. I think it's the best. Like, it's one of my favorite parts of doing what I do is, it's kind of, it's funny looking back, because they are the reason I started and so it reinforces every day, just keep working hard at it, even in the bad times, right? My why is really important. They're really, really important. They're everything, right? Yeah. And so for example, there was a period there I'm like, am I going to be profitable again? That's a tough question when you've been doing something for a long time and your eggs are in the basket. So, and the answer was, well, I had to be a professional again. I had to get back to work, right? And so for my kids, I'm going to teach them no matter what. I think it's great to teach them. You learn a lot about the world and you learn a lot about finance, and it's a really cool. I think it's good to understand our world, at least, and some good lessons about money, good lessons about impulse control and discipline, for sure. So I'll let them.
Okay. Any final messages you want to tell audience watching this?
There's hope. Sometimes they just need a different perspective. Okay. And especially the people, because what else can you do for 2, 3, 4 years and just like not necessarily feel better? Like your marker is what? Money in your account, your P&L essentially, right? Can you make money? That's what we're trying to do. And if you're not making money after 2 or 3 years doing the same thing, that can be very discouraging. I get that for sure. But it is a theme. And that you can't bypass experience, right? So just because you have losing experience does not make it it's still experience, in other words, right? So you've actually done the part that you cannot force, which is time, right? And so for those people who are really struggling, that's what I say, like, look at the bright side. You've put the time in. Now it's a matter of, if you've been doing the same thing over and over again, maybe you got to switch something. I think 3-4 years in, 2 years in, if something's not working at all, well, it's not that everything's been in vain, but you need to switch it up. You need to find a new mentor. You need to find a new pattern. You need to get a new computer. I don't know, right? You need to figure something different. You can't just go back to the well every day doing the same thing. That's crazy, right? That doesn't make sense. But, sometimes a little tweak and you're there. And I've seen that happen for people where it's just like they're on the verge of quitting. And then next thing I know, they're on a run and they're changing their life, you know? And that's what's really cool to see. It's also, it can be anyone, it's so diverse, our community. And I've now seen men, women, old, young, doesn't matter really who, thrive. I've got, certain students right now who are in their 60s and like having amazing trades, and just to see them like, because we're a pretty young, it's a pretty young demographic in trading for the most part, obviously. And that being said, you got to do something, right? If you're struggling, you have to do something. But oftentimes, if you've been in the game for years, you may not be as far away as you think. That's all.
I see.
So stick to it. But change, make necessary changes to push your trading forward. I do it. I'm doing that. I try to be open to learning from anyone I can. Students included, like I said, bring me ideas all the time that improve my trading. So I think it's important to be open, have hope, obviously the discipline and hard work and stuff everyone says, but don't beat yourself up too, right? If you're beating yourself up every day, you're not this isn't for you. You're not gonna be able to do this and be happy, because if I did that, I miss trades every day, I screw up every day. I let people see that I'm superhuman. Not a superhuman, I'm just very human, right? And as long as you're wise there, like, and the right reasons, and if it's a Lambo, it's a Lambo. If it's your kids, it's your kids. Who cares what it is? Go get it, right? Go get it. And if you've been doing this for years, figure out why it's not been working, change something. I always say things just will hopefully align if you've been in the game long enough. That's everything that everyone I've seen, there's sort of a snowball effect of your experience meets your knowledge, meets the strategies that you've learned and been practicing over time, meet a certain market. And all of those can kind of combine to create a snowball effect where you're able to push size finally and realize sizing and how that works and all that good stuff, and then exponentially grow, right? And you just have to stick around long enough to get to that point. And for some people it's a year, for some people it's 5 years, for some people it's more,
Where can people find you online, Roland?
They can find me on YouTube at Roland Wolf. Just search Roland Wolf.
And what's your Twitter handle?
That is Roland Wolf 86.
Okay.
And then Instagram is Roland Wolf Trades. And I have 1,000 imposters on there.
Oh, okay.
Oh my goodness, yeah.
Yeah, we'll make sure people follow the right accounts.
Yes, exactly.
Thank you so much, Roland.
Thanks for having me.
So after watching this episode, do you also agree that day trading small caps can be made simple? The key to Roland's success is how he only focuses on the simple dip buying strategies, and he doesn't get too aggressive if the overall market is not in the favor on the long side. His patience, discipline, and his priority for risk-reward really help him find his own repeatable trading process. If you learned something new today from the episode, please comment down below to share your thoughts with other inspiring traders. Make sure to like the video down below, and remember, you can watch and learn from other successful traders on the playlist over here.